You didn't file a claim, you didn't change a thing, and your renewal still showed up higher than last year. If that's you, there is a real explanation, and you deserve to hear it honestly. I'm Jansen Morris with Texas Select Insurance Group in San Angelo. This is one of the most common questions we get, so instead of brushing past it, let's actually answer it. We'll cover how insurance pricing really works, what pushed rates up across Texas, what is genuinely within your control, and where an independent agency can help you when your renewal comes around. Here's the first thing to understand. Insurance is priced on pools, not just individuals. When you buy a homeowner's or auto policy, your premium is not calculated solely on your personal history. It's calculated based on what it costs the insurance company to pay claims across a large group of policyholders in your area and in your risk category. Think of it like this. Imagine a town pool. Everyone in that neighborhood pays into it, and when someone needs a payout, the pool covers it. If the whole neighborhood starts filing more claims, or if the cost to settle each claim goes up, then everyone's contribution has to go up to keep the pool funded, even the neighbors who never filed anything. That is the basic mechanism at work when your premium increases and you did nothing wrong. The pool got more expensive to maintain, and the cost gets spread across everyone in it. Now add to the fact that insurance companies themselves work on a relatively thin margin. They bring in premiums, pay out claims, pay their operating costs, and whatever left is profit. When claim costs rise, and they rose sharply from 2020 through 2024, companies either have to raise rates or stop writing policies in certain areas. Texas saw both. Let's talk about one of the biggest drivers, construction costs. When you buy a homeowner's policy, you are insuring the cost to rebuild your home, not the market value of the property. So the relevant number is not what your house would sell for, it's what it would cost to tear it down, whatever's left after a loss, and build it back up from scratch with current materials and current labor. From 2020 through 2024, those costs went up significantly. Lumber prices spiked after the pandemic disrupted supply chains. Steel, drywall, and roofing materials all followed. Skilled labor, the carpenters, framers, roofers, and drywall crews became harder to find and more expensive to hire. And when repair demand surged after a major storm, contractors in affected areas were booked out for months, which pushed costs even higher. In Texas, we had a compounding factor. The February 2021 winter storm hit virtually every part of the state at once. Burst pipes, damaged roofs, flooded interiors. The repair demand was enormous, and it happened at exactly the same time that construction materials were already scarce and expensive. That event alone created a gap between what insurers had priced coverage at and what it actually cost to pay those claims. So insurers looked at the replacement cost assumptions built into policies across Texas and realized those assumptions were out of date. Policies got repriced to reflect what rebuilds actually cost. That repricing showed up as rate increases on renewals for a lot of Texans, including people who never filed a claim. Here in the Concho Valley, we do not need anyone to tell us that West Texas weather is serious. We've all seen what a good hail event can do to a neighborhood in just an hour. What's worth understanding is just how much Texas hail and storm activity affects statewide insurance pricing. Texas has more major hail events than any other state. In 2024 alone, Texas saw 878 major hail events in 2020. Major hail events. In 2023, the Dallas-Fort Worth area had a series of storms that produced an estimated $7 to $8 billion in insured losses. That is one metro area in 1 year. The Concho Valley had its own noteworthy events. In May 2024, a supercell storm tracked through the area and produced hail described as tennis ball to softball size in some locations, along with damaging winds and flooding. San Angelo has had some of the most severe in nearly 3 decades in recent history. When insurers pay out large volumes of claims across the state, the cost of those claims get factored into rates statewide and even regionally. If your town got hit last spring and your neighbor's roof came off, the overall claims experience in your region affects what carriers charge to write new policy there going forward. Again, it's the pool. When the pool pays out a lot, the contributions go up for everyone. This is not specific to Texas Select or any other. It's how the math works across every carrier. Here is something most policyholders never hear about, and it's called reinsurance. Reinsurance is simply insurance for insurance companies. Think about it this way. If a massive tornado outbreak or a hurricane hits a large area, an insurance company could face billions of dollars in claims at one time. No single company holds enough cash to cover that on its own. So companies buy their own insurance from large reinsurance companies to protect themselves against catastrophic loss events. The price of reinsurance went up substantially from 2022 through 2024. Some property catastrophe reinsurance rates rose by as much as 50% at certain renewal periods. The reasons include the same forces we've been talking about: more frequent severe weather, higher rebuild costs, and a few particularly costly global catastrophe years. When it costs an insurance company more to buy reinsurance, that cost gets passed downstream. It shows up as an upward pressure on the premiums that you and I pay. You never see a line item for reinsurance on your policy, but it is built into what carriers charge to write coverage in high exposure states like Texas. If your auto premiums went up, there's a separate but parallel set of reasons. Modern vehicles are expensive to repair in ways that they weren't 10 or 15 years ago. Think about what's in a vehicle today: cameras embedded in mirrors, radar sensors, advanced driver assistance systems, adaptive cruise control, automatic emergency braking, lane keep assists. These systems make modern vehicles safer in a lot of ways, but when a bumper gets tapped in a parking lot, what used to be a simple $400 repair might now involve replacing sensors, recalibrating cameras, and running diagnostics that can run $1,500 to $3,000 or more. Vehicle parts cost rose more than 43% from early 2019 to early 2025. According to Federal Consumer Price Index data, labor rates at body shops went up too, driven by the same skilled labor shortage that hit construction. And when a vehicle is totaled, the total loss of payment is based on actual cash value, which reflects higher used car prices that persisted well after pandemic-era demand cooled. In West Texas, longer distances between towns means more highway miles for most drivers. A high-speed collision on a rural highway is more likely to total a vehicle than a low-speed urban fender bender. That exposure profile matters when insurers look at regional claim patterns. And to that, the rising cost of medical care and personal injury litigation, which affects liability coverage. When injury claims cost more to settle, liability rates respond accordingly. None of this is pleasant news, but it does explain why a clean driving record didn't fully protect you from a rate increase. The whole market moved. Now, let's talk about the side of this that you can actually influence, at least to some degree. Deductible choices. Your deductible is the amount you agree to pay out of pocket before insurance kicks in on a claim. Choosing a higher deductible typically means a lower premium, because you're taking on more of that financial risk yourself. If you're financially positioned to handle a $2,500 or $5,000 out-of-pocket expense, raising your deductible from $1,000 can often reduce your premium meaningfully. Talk to your agent about your specific situation, because what makes sense depends on your cash reserves and your risk tolerance, not a generic rule. Coverage review. Policies can accumulate coverage you no longer need or miss coverage you now do. An older vehicle with a low market value might not need the same level of physical damage coverage as a newer one. A home that has been renovated might need its replacement cost estimate updated. Reviewing what you're actually covering and what the current value of that coverage is worth doing at renewal rather than just renewing on autopilot. Bundling. Many carriers offer discounts when you place both your home and your auto with them. Not all bundling arrangements produce the same savings, and sometimes the best home rate and the best auto rate are with two different carriers. Your agent can run both scenarios. Credit. In Texas, insurers are permitted to use credit-based insurance scores as one of the factors in setting rates. It's not the only factor, and Texas law prohibits a company from basing a decision solely on credit. But maintaining strong credit does generally work in your favor in the states and for the carriers where credit scoring applies. Texas law also now requires insurers to re-rate your policy at renewal using a current credit report if you or your agent requests it once per year. That's worth knowing if your credit has improved. Driving behavior and claims history. Your personal record still matters. At-fault accidents and certain moving violations affect your auto rate. A long period without claims on both home and auto is something some carriers reward over time. Undo market-wide rate increases, but they do affect where you land with the range that a carrier prices for your risk profile. The honest framing here is that these levers can help at the margins. None of them guarantee a lower total premium in a hard market. They're worth reviewing, and your agent can walk through them with you. Expecting a dramatic reduction may not be realistic in the current environment. Here's where working with an independent agency genuinely makes a practical difference. A captive agent works for one company. When your rate goes up with that company, your only real options are to accept it, increase your deductible, or reduce coverage. You cannot ask a State Farm agent to quote you on a nationwide policy. An independent agency, like Texas Select, represents multiple carriers. That means at renewal, we can take your current coverage profile and run it against several different companies to see where you're priced competitively. If your current carrier has repriced your risk in a way that no longer reflects the market, we can find out. This doesn't mean we always find something cheaper. Some renewal periods, the market has moved broadly, and every carrier in a category is at a similar price point. But having access to multiple options means you're not locked into one answer. And when your carrier does shift pricing in your favor, or a new carrier enters a segment of the market with competitive rates, your independent agent can act on that. The Texas Department of Insurance reported that the pace of homeowners rate increases slowed substantially from roughly 19% in 2024 to about 4% in 2025. That's a real shift, and it means the environment is becoming more competitive again. The window where shopping actually pays off is not always open, but when it is, working with an independent agency means you have that option. What we always recommend: do not wait until the last minute before your renewal. Give your agent enough time to do a proper comparison. A week before renewal is not enough runway to shop multiple carriers and complete a policy change cleanly. Let me summarize what we covered today. Insurance premiums can rise even when you file no claims because pricing is based on the collective cost experience across your risk pool, not just your individual history. The main drivers of Texas rate increases from 2020 through 2024 include inflation in construction and labor costs, the rising cost to repair and total vehicles, reinsurance costs passed downstream from the global catastrophe reinsurance market, and the sheer volume and severity of hail and wind events across the state. There are things partly within your control: deductible levels, coverage review, bundling, and credit where it applies. None are guaranteed savings, but they're worth reviewing. And working with an independent agency means you have genuine options at renewal, rather than a single carrier's answer. If your renewal is coming up, or if you just got one and you're not sure it makes sense, give us a call.